The Reserve Bank says that you shouldn't worry about interest rate rises until 2024. But guess what? The rest of the market thinks that they've got it totally wrong and that perhaps next year, but definitely 2023, interest rates will go up. What does it mean for you? Well, you are going to be paying more. How much more? Perhaps not what it used to be. So don't stress. For those of you that had a home loan back in 2007 or 2008, it's not going back there because global interest rates are much, much lower. You want to know more about it? Watch the rest of this video. Jack mentioned interest rates there, and I did see at the start when I was just doing the intro, I can't remember who it is, so sorry if I don't shout out to you. I did see a question there just about interest rates and these predictions in terms of where they're going. And I guess the consensus is everyone knows that the interest rates at some point will have to go up. When exactly, I guess, is the big question mark. What, the Reserve Bank governor has pinned himself to 2024 all year. And despite perhaps, not being as definitive in the last couple of weeks, he's still very much talking about 2024 before we'll see any rate rises. What's the consensus of the market out there in terms of interest rates? When are they going to go up?
Well, in terms of the consensus, James, most of the banks are saying they anticipate interest rates going up late next year. So Reserve Bank is still saying 2024, 0.1%. But if you look at all the major banks, they're projecting, they can see that sort of heading towards between 1.5 and 2% starting late next year. That seems to be where people are pricing things at the moment.
Okay.
Yeah.
So Jenny just asked a question about where or how high are they going to go?
Yep.
And I think maybe you answered that, but just before, if you confirm if that's the case, I just want to know when was what was at the, we're at record lows. What was our previous high and when was it in terms of the...
Well, firstly, everybody's saying it'll never reach that. So that's important. So don't panic and don't have to take Valium straight away. So in 2008, we were at levels of about 7.25%. So, that is, relatively high compared to what they're predicting, about 2%. So the predictions are it will never get to that. And that's got a lot of factors like global interest rates are low. There's a lot of factors that they're saying that it will stay around the 1.5 to 2%. It's not we won't see those crazy interest rates for a long time.
Okay.
Yeah.
So my story about, when I was paying 12 or 13 grand a month in interest back in 2007,
Yeah.
No one's going to be able to beat that story, are they? Because we're not going to see those record highs.
That's what they're all projecting. Yeah.
That's my version of obviously what I have to listen to from my dad telling me in the 80s when he was paying 13% interest and 15%. So, I guess interest rates are really, really important because they're, the number one, if they're not the number one, they're the number one or two most important factors in terms of prices and so forth, because they drive people's affordability to be able to get a home loan, the size of the home loan, and obviously what they can service. But what are some of the effects that you think we're going to see on the market and or individuals over the next couple of years then, Greg? If interest rates are going up,
Yep.
What can we expect to happen?
Well, what it will do, it'll start it will bring things back to pre-pandemic levels. So right now you've got these very ultra low, historically low interest rates. So people's monthly repayments have reduced. This will probably bring it back to on an average of about 7,500 per year above what they're currently paying. So that's assuming about 2% interest rates. But that, when you look at that put it into perspective, it will bring things back in line with what we were seeing pre-pandemic levels.
Okay.
Yeah.
So I've just brought back up this graph as well, just to help Greg in his answer. Anyone that's concerned about, any hysteria, oh my God, the market's going to crash. Well, the market's been supposed to crash for as long as I've been alive and even before I've been alive. So don't listen to the doomsdayers. They always predict it. They always get it. And I think what was important, as Greg said, where interest rates are going back up, right? There's no denying that. They're not going to stay at the level that they are forever. But we're talking about going back to where we were pre-pandemic, not back to 2007, 2008, the last high that we saw. And the reason I brought this graph up again is just remember, yes, we're seeing an elevated level of transactions here with the red line, but the black line was 2019, which was still a really strong year. That was with those interest rates there. We had growth generally across the board, across Australia, in terms of house prices. So anyone that's concerned, that's sort of where we're going back. Sure, as Jack said, we're not going to be getting the massive growth that we've been getting the last 12 or so months, but don't expect house prices to halve or whatever.
Yeah.
They might flatline. They're definitely going to slow down their growth, but definitely we're not going to see all of a sudden things go crazy. And for most people, you can probably afford the rises because I guess, Greg, everyone's getting assessed on the buffer rate anyway,
already,
which is adding
yes.
3%. So
Yep.
based on what you're saying, it's not really going to make a big difference
It's not
to
going
people that are currently owning a home.
Yep.
Maybe for those buying it, it's going to be,
Yep.
you know, they can't borrow as much, but.
And I think what everybody says, the doomsday says that the property is going to fall out. It's never going to do that. As you can hear, I'm a foreigner. I've been here a while, but I still speak funny. And it's over that time frame, we'll see some rectification. We'll see some, reductions, but ultimately the property graph in this country is going up. That's what it does.